Hey everybody, and welcome to another episode here at Tribal Trades, coming at you from the great state of Florida. One hell of a drug. And today we've got stocks on Sunday, and we're going to talk about the Big Short Part 2. What is the Big Short Part 2? But before we do that, smash the like button. This does help get this channel out to more people, and of course does help support the channel, as does your amazing comments that you take the time to write. Thank you so much for those. And let's jump into the news. And we just got a short news today, which is the short. And there is a group wanting to short Tesla stock, and they're telling people in 4 easy steps how they can get wrecked, because there's nothing like shorting Tesla stock at the bottom after it's already gone down 55% or more. And so we're going to take a look at the Tesla stock. We're going to take a look at the Tribal Trades cheat sheet and see how we have performed in the last week. Now, these are the entries that I gave here. There you have it, from the stocks that I'm trading, and you are more than welcome to follow along here. And you can long these trades or you can short them. There is 4 steps here on how not to get wrecked, and there's even a tutorial. Now, these can be for longer plays, for short-term scalps, or for some medium-term swings. These are just simply entries and exits. You could, for example, if Tesla gets, or Apple gets to 220, you could, if it rejects there and there is resistance, you could short it back to 213 or even back to 204. And so you can also long it from 213. Currently, I'm not shorting the stock market. I'm long on these plays, and I'm buyer. So I am a buyer of Apple at 213. I'm a buyer at Amazon at 197 and at Coinbase. And of course, Google, buyer at 165, and so on down the list. So let's see how these plays played out. And we're going to start with Apple. And of course, we are going to get to Tesla and see how this Big Short Part 2 works out. So firstly, for Apple, we're going to see that we had a nice bounce. Now, we did have some closes below this area here. I'm going to call this a deviation below the range, okay? Now, the area to look out for is that 221, which is the 50-week moving average. Now, this is a key here that if we were to reject here, I'm likely going to sell out of my position there and then look at getting back on a retest down here. So this is a key level here at 221. You also have the 200 EMA on the daily there, which we're going to have to move that down just a fraction. Coming in at 224 with the 20 EMA on the daily coming down around that same level. Now that's a little bearish where you have a short-term EMA crossing below the longer. Now we already saw this would have been a good place to exit your Tesla trade when the 20 went below, actually went below here, went back up, kind of tried to cross back over, and then ultimately rejected and failed. So when you have the 9 is this lighter pink color, go below the 20, that's fairly bearish. When the 20 goes below the 50, and then the 50 goes below the 100, which it's about to do there, and of course the 20. So this is all pointing down. So this is bearish. These are all bearish price movements here. Now, when would I flip bullish back on Apple? When it gets back above the 50-day moving average at 232. Now, you could front run it like we've done here at 213, believing that we're going to see some kind of a bounce, and we have seen some kind of bounce. We're getting stopped there at the 9 EMA on the daily time frame there. And of course, if we break above the 200 EMA on the daily and the 200 daily moving average around that area, 224 and 228, then we've got that 50-day moving average at 231. So get all these lines on your charts. You can learn how to do that and more in the Tribal Trades Discord. The link below is in the description. You can get signed up there. You can learn how to long and short the market, all these setups, learn how to set up your chart. We do live trading sessions every single week. We did one yesterday, looking at doing again another one today, and then each week we do those sessions. We also teach leverage trading in there, so you can learn not just how to make money on the way up, but also on the way down. Right now, you can email me. There is a link below. You may need to click the more button. It'll pop out the description, and there's an email there if you're interested in joining. This is a closed, exclusive trading community. You can get there by invitation only, and you can send me an email to get that invitation. I'm also the Stocks with Josh Discord fam there. I have my own Crown Traders channel in there where I share trade setups, some resources, insights, do some leverage trading in there as well. There are some leverage trading tutorials that we've done with the community there also. And of course, entertainment, because I'm not a financial advisor. This is not financial advice. This is for education and entertainment purposes only. Are you not entertained? You can be entertained on the way down if you learn how to short the market there. So we got this entry at 213. That's so far holding up pretty well. And for those of you who are shorter term traders, 220, those of you who are holding for a longer term, we're looking for these more upward price targets. Of course, be careful though, if we come back down to 213 and lose that, you may want to be out of that position and get in a little bit lower if we're to see a little bit more downside. We've got some more tariff stuff coming up. Obviously, early April, there's going to be some more action, or whether we see some of those things take place for the first week of April. All right, let's have a look at Amazon. So Amazon really has been struggling to get back above the 50-week moving average. That's why I have the entry at 197. That's a solid place, but right above that, the 200-day moving average and the 200 EMA is sitting at around about 200 and 201. That would be a better, safer, more conservative entry to get in there. And of course, the 20 EMA on the daily has also come down. That would be a good place to get in there as well. Sometimes looking at the 4-hour chart, you can kind of see what's going on. The 20 EMA and the 4-hour and the 50 weekly are together there. So that can show some difficulty there. And if you actually look on Apple on the 4-hour as well, you can see the same kind of thing going on there, where you have the 20 EMA on the 4-hour is struggling to get above that. So with Amazon, this can be accumulation here. This can be a front run if you want to try and front run the trade. Personally, for me, I think at least a break above 197, but a more conservative play would be getting there at 201. And then you got the levels there on the cheat sheet. So we have hit this level here up there at 222. Of course, these are just Fibonacci's. And so if you want to learn how to set up your charts so you can get these other levels in between here, like we've got one here at 210 where the 100 EMA on the daily is as well. You can set up your charts with me in the Tribal Trades Discord there. One of the new ones that I've added in, and is not, I don't think I've added it to the cheat sheet, but this is one of the new, more riskier plays. One of the other riskier plays that I was in was SoundHound. And this is one that I gave was just a few dollars. And this one went and all the way up to $25. For those of you who caught my trade, I gave it all the way back at around the $3 or $4 level, and that went up and did around 400-500%. I'm totally out of that SoundHound position, by the way, at the moment. So this is another one that I'm kind of in at the moment and keeping an eye. Let's look at what could be a decent entry here. It would be right here where we are at $1.34, which is the 20 EMA on the daily. We can also see, have we got anything on the weekly? Not really. So that would be it there. And of course, if we were to lose that level, you could either short the stock back to the bottom, back to $1, or you could obviously stop out of that position, would be what I would be looking at doing for BTM. We will add that to the cheat sheet there. Coin was a play that I gave, again, 178. We've hit that on the button there. So that's worked out to be quite a good trade. Now, we didn't get to 198, of course, which is up. There's 198. What have we got going on for 198? Let's look at the 4-hour. So again, we're getting stuck on the 20 EMA on the 4-hour. And then we have the 198 level, which would be our first area of taking profit there. Of course, again, if you are in this for the longer play, and of course, look at the 200 EMA and the 200-day moving average. And we're in danger of having a death cross here with the 50-day coming down at 246. So this is more of a risky play, because if the bull market in crypto is over, I would expect us to come all the way back to $160. If we lose this $178 level there, this is almost, that would be a nice short from 178 down to 160, or you could stop out of the position there. Of course, those who just got the 178 play, you could have actually taken profit here at 190. Again, these levels aren't, these moving averages and EMAs aren't in this chart because they move all the time. And so it's just the Fibonacci's there, but you can see this would have been a good little take profit, and then you could get back in again, ride it up. And it's kind of happened a few times up to that level, stopped, and then came back, get in, and you can kind of ride this up and down if you're familiar with shorting. If not, you could just take a long position at 178, a buy and hold, and then this seems to be the resistance here at 191 for Coinbase. If we look over at Google here, struggling with this 165 level, 164, 165, very difficult right there at the moment to get above. Obviously, this entry 157 actually came down and got hit for Google. 157, 155, actually, let's have a look if we did get down to 155 there, 156 by the looks of it. So didn't quite get our target to the downside there. 157 actually is a Fibonacci. Maybe that's a little bit of a mistake. I might clean that up there at 157. So we did get down to these levels here. Here's the deal. If you're dollar cost averaging for long-term investment portfolio, like I'm buying this for my kids, you can just buy and hold, and in 3, 4, 5, 10 years, you should see some great returns on this. So this is the way that you can play these levels, is you can either play it as a short-term play. If you're playing it as a short-term play, you would have stopped out at 165 and would have looked to get in at that Fibonacci at 157 and grabbed the play there, ridden it up, and we're waiting to see when the market opens if we can jump back above this level and ride our way back up to, there's a resistance there at 169 where the 20 EMA on the daily is as well. And you can see the 20 EMA on the 4 hour is currently providing resistance as well as that Fibonacci there. All right, let's jump into Meta. And Meta did come down and hit our target. I went below our target, but look where it ended up happening at the 200 EMA on the daily at 576. And so we come back to the Meta chart here. Again, these are Fibonacci levels. So this is why you have to have your chart set up and know and go, oh, why didn't this get hit? It didn't get hit because the 200 EMA and the 200-day moving average provided support there. So that would be a nice level. So mark that on your charts to have your 200 EMA needs to be a staple of your charts there, and that's had a nice bounce. You could have ridden that 200 EMA at 576 all the way back up to 600 there. And so this would be an entry here at 576, or if we flip 600, retest support, that could be, but then we've got some major EMAs and moving averages coming up here. We've got the 50-day moving average, we've got the 50 EMA on the daily, we've got the 20 EMA on the daily, which actually just crossed the downside. That's quite bearish. So I would expect some more downside for Meta. Maybe we come down, trade below here, and come down as low as $560, which is where the 50-week moving average is coming up to. So that could be a nice entry. So keep an eye on Meta. I'm not in the Meta plays because I did get Meta a long while ago back in 2022, and I only just sold at around $700. And so made about 500-600% on that trade. So I am waiting for a little bit more of a discount for Meta on that play. But if you're trading short-term in and out, then those can be some entries there. But I'm not recommending necessarily for a longer-term hold at the moment. Because I want to see us over the 50-day moving average. If we go to MicroStrategy, it just continues to buy Bitcoin. And we can see here with MicroStrategy, our entries were at 235. Who got that 235? I gave that last week, and look what happened. We bolstered all the way up to this key resistance of 297. We're above it. I want to see flip 315. 315 is what I would love to see flip there. We do have the 20 below the 50 EMA, so I'd like to see those cross as well. So I'll be interested to see. But 297 can be an entry if it holds as support. Otherwise, those who got in at 235. You're absolutely laughing right now. That was an absolutely fantastic entry that was given on the show just a week ago. So most of these plays, or all these plays have hit, but did you execute? I'm finding a lot of people were saying, oh, I saw the play, but I didn't do it. Why didn't you do it there? You can always set stop losses. Nvidia was another great one. I actually cashed out of this position here, which was great, up at 122, around there. There's the 50-week moving averages. We are seeing a death cross happen with the 50-day going under 200-day moving average. This could lead to some more downside for Nvidia. It's quite possible that we do get down to these $190 regions, maybe even 75 again there. And I originally gave Nvidia many months ago on these trades there, back here many months ago now, gave the Nvidia trade, and I also gave the Nvidia trade back here as well. And so Nvidia could see some more downside while we're under the 50-week moving average at 121. We're quite bearish. We do need to get back above the 50-day moving average there at 127. Even the news that we saw, which was I thought was quite bullish for Nvidia, which was General Motors has selected Nvidia to build its self-driving car fleet, still cannot give it a real great move and a great pump. So just be careful with Nvidia there. Obviously, if we hold this 107 line here or break above 122, then there could be some opportunities there for Nvidia. So that trade worked out beautifully well there. We did hit these profit levels. Oh, I should actually color these in. We hit these beautiful profit levels to the upside on all of these plays. They're absolutely fantastic. And then what are we looking at here for Tesla? So Tesla, we had amazing entries on Tesla here. Again, let's find the Tesla trade here, and we're going to wrap this up in just a moment. The Tesla trade. So we got down to that low 200 level, 215 by the looks of it there. Hit that nicely. And then we've had a nice bounce. Now, this is the 200 weekly moving average. That's super bearish for it to be down that low. That's like bear market kind of levels. I mean, when Tesla came down here, really low, $138, and I know I grabbed some there and was able to ride this up and took my profits up around this $400 level here. But so this is area that I'm accumulating Tesla in here. Already the trade's up 250, so we can see 250. That's an area, if we break above that, retest the support, that could lead to a nice trade up to 261 or even 270. I wonder if the bulls are going to get motivated by this group that is trying to short Tesla. I mean, you wouldn't short Tesla down here. Now, sure, you could open up a very, very quick short from 250, maybe it drops down to 230. And obviously, if we lost 230 here, the 200 EMA on the weekly, we have a key Fibonacci level, which we managed to hold there at around $215. Otherwise, you know, you got 200, and then you just keep dropping and going. So this will be very interesting to see how this plays out. But I am long-term and medium-term bullish on Tesla. Even on the short-term, you can see there was a couple of good plays to the upside and the downside for Tesla there. And then we'll close out with TSM. TSM's just kind of been a little bit of a stable point at the moment. If you know that term from crypto there, it's around about that 177 level. That's really the big line in the sand, that 50-week moving average. It's really struggling. The 50 EMA on the weekly is also there around that level. That is causing, we're just kind of moving between 170 and about 179. And so that could be a little area to swing trade this short and long. You know, get in at 170, get out at around 179. You know, on the rejection 179, you could go short back to 170. And of course, if we get above the 200-day moving average, this could flip bullish. But of course, we've got the 50-day up there at 195. A death cross is looming there, okay? And of course, we don't want to see the 20 EMA crossed below the 50 EMA on the weekly. It might have already done so on the daily time frame. Yes, it has. It's crossed down. You can see what happens when this crosses. That usually is a good time to get out. I mean, on TSM, if you're up here on TSM, and I wasn't, I only started getting into the stock around here when they announced the partnership with the US government. But you can see here, this is just a golden opportunity to either short the stock or get out of the stock to get in at lower levels there. And of course, then we lost the 200-day moving average and the 200 EMA on the daily, which is also sitting at 180. So I would say trading this one between 170 and 180 could provide some great dividends there. All right, we're going to wrap this up for today. Again, as always, thank you so much for tuning into the channel. And of course, until the next episode or until I see you on the Discord, happy trading.